right, welcome everybody to a massive week of data, of trillions of dollars of options expiration, and of course of markets getting all a little bit too wild. We've got some sell-off coming in here this morning, thanks to, of course, the crypto universe doing a big dump on Bitcoin. Could it be the end? We might actually have to discuss Bitcoin. It wasn't in my newsletter, but just a quick reminder, we do have a newsletter just released, sent it out. A lot of people are saying, where the hell's my newsletter? I've done it. There you go. And the link is in the pinned messages. So if you haven't signed up, sign up for it. It's pretty good. We've got some good charts in there for this week. Some ones to keep as well for 2024. Save those little pretties and put them in your folder or wherever you keep them. Dropbox, I don't know. What do we use nowadays? Some kind of cloud technology or AI? I'm not sure. Anyway, I hope everybody is having a great morning, afternoon, and evening. Did you all have a good weekend? I know that Lambo did, because Lambo was, of course, driving a pretty sweet car. Is that right, Lambo? Anyway, I had a pretty good one. It wasn't bad. And I actually did a lot of analyzing of the markets because I feel like we're at a pivotal point, and crypto is what I want to get started with. It wasn't going to be, but then, of course, it crashed today. So notice here, first up, I just want to mention, well, I probably actually need to mention that I need a pen. So let me get the pen up. Need to be actually able to draw on the screen so I can show you guys what we're doing here. But we'll get that up right now. There we go. Got the Epic pen. People ask me about that. So you can see here that we've got this kind of market that's been steadily increasing. And it's been melting up. Now, this is actually just a 20 moving average, but this is actually what's been holding it. Now, I do love the 20 moving average. 28 moving average daily. It's been melt up, melt up, melt up. I'd say that's an incredibly worrying sign. You know, that's our first flash crash, proper flash crash that we've had in Bitcoin and we've had in the crypto universe for quite some time. You could argue that was a flash, but it wasn't to this degree. So let's just measure it out, because I think that the distance is important. So we've dropped about 10. Now, if we drop 15, which would be the standard big crash, that's going to be actually a lot bigger, because that's the most important. But to me, it's actually changed trend here. And while it may drive higher, this is a significant fall off. So let's just have a think about what happened. We basically went to a high. We rallied. Of course, my main aim has been 46 to 48. Don't get me wrong. That's been my main aim. Still could reach it. But this is a very worrying sign, because to see a flash like this across all of the crypto universe, and therefore, that coming with also a little bit of spiky yields, which is what the newsletter is about this week. Of course, newsletter is focused on yields, focused on some charts for 2024. That's really the concerns. And this makes you question a lot about Friday, because, of course, we saw the non-farm payrolls. And I'll be real, the non-farm payrolls, you take government numbers out of it, you kind of get pretty much in line. Then, of course, you see a revision down. So you see that 35,000 jobs lost, I think it was, for the September, not the October, the September. And should remember this, I just wrote about it. And then, of course, we have, the huge kind of point there that, well, we're seeing a stabilization in employment. And that's exactly what the Fed's doing. So think of it as like a tightrope. There's his little Fed, and the Fed's sitting on the tightrope, and they're like, oh yeah, we're doing a good job. They're doing the limbo. They're trying to limbo over the tightrope. Here's a question to the chat. Do you think that these little Feds on the tightrope, are they going to fall off, guys? And below here, we've got the sharks, the crocodiles. Do you think they're going to get crocodiled with the big nice teeth? Or do you think they've done a good job? It's a bad crocodile. There we go. We'll go. That's the serpent crocodile dinosaur thing that's down the bottom here. So do you think these Fed guys, they're going to walk the tightrope and do a soft landing and it's all good and get to the other side? Jerome's is around here. Jerome's here. This is Jerome. And this is where the rest of the people are. Are they going to get to the end, or are they going to get eaten by this crocodile moose thing that's down the bottom here? I think that it is all going to be about growth. And again, that's in the newsletter. But what's really telling us is that we need to be on the lookout for both examples. And that is a soft landing narrative and a hard landing narrative next year. And remember, we don't really have to be super concerned about both of those narratives yet, because we haven't seen yield inversion go through. So that means that the US 2-year has not crossed the US 10Y. And I think that's a big one there. If we don't see that cross, remember, just again, if you're ever going to look it up, US02Y/US 10Y, have that on your charts. If you're new here, subscribe. If you're not new here, then you've already known about this for a while. But we do want to have that on our charts. So we've seen the sell, and this is big. This is the sign of weakness that many were looking for. I do think it's still possible for crypto. It loves a good sell and then good rally up. So it's got that kind of buyers kind of level here. We might grab a fib out just to show you the level of the 61.8 so you can kind of get an idea. Now, a lot of people are going to say that's a double top. Now, that's like kind of the level. And here is a significant zone. Do remember, though, we bounced off the 20 moving average on the daily. So I'm kind of thinking that there could be sellers around here. If we get through the 20, then, of course, we're in a bit of a weakness period for crypto. But at this stage, it's still technically been very, very strong. I'm worried about that. That shows me that we're getting closer to that kind of final level for this current rally in the Bitcoin movement into next year. Oren says it's sharks with laser beams. Yep, that's true. And then somebody said push them over. That's a bit mean. By the way, if you can thumbs up the video, it does help us. We do an earlier session at the moment. So yeah, it always is very, very helpful when you share it. I'll just quickly by the way, I'll just share this because I know that a lot of people do forget we go early. Let me put that in our little Discord here. What are you guys all looking at this week? What's your favorite chart? Give me your number one chart right now. Number one chart you're looking at. I'll read a couple while we're looking through. Let's check it. Okay, here we go. Nat gas is oversupply, always was the past 2 years. We're capturing almost all of us, says TX Redman. Man, everyone's loving this nat gas discussion here. All right, we've got Tesla, we've got the Russell, Mr. Squiggle. Yes, I'm a great drawer, can't you tell? Disney, Joe says. Okay, Disney's interesting. We've got copper, we've got JWN, DAX, natural gas, IWM, show that broadening pattern. We like that. RK, my goodness, RK. Can you believe it? We'll have to look at a lot of these, 2 year, etc. Okay, I'm going to give you my number one chart to be watching this week. I think it's US 10Y. US 10Y, guys. US 10Y, US 10Y, US 10Y. Why? Because I believe something happened with yields on Friday. We finally saw a big bounce from yields. Okay, here it is. And it broke the downward trend line. Now, I talk about this in the newsletter. I'm talking about it here. This is a fairly big deal. Now, remember, this week, what do we have? Let's go to the economic calendar of, I would say, visions. You know, the economic calendar. How do I zoom in here? There we go. All right. So we can see here CPI, core CPI, big data. This is probably going to be a nothing burger, but you never know. Still, it's a volatile event. Inflation really doesn't matter as much because everyone's convinced it's gone. Okay, so that's what, unless it's back in a big way, that's going to be a bit of an issue. Then we've got core PPI. But then, of course, we do have the FOMC interest rate decision. Now, of course, this is a low chance of any change. Do remember the big thing here is that if we do see 5 consecutive no changes, that has meant in 100% of previous history cases, we have not seen a further rate hike. We've always seen the next move be a cut. So it means pauses in, cuts in. It's not going to help us to invest, but it's just an interesting stat there. Then we have Fed Chairman Jerome Powell's press conference. You just know he's going to piss the market off somehow because he could not possibly like the market being where it is. He must be like thinking, how can I get the market to drop a couple of 100 points, but also not to freak them out too much? So, of course, he'll be saying the pretty much exact same thing he always says. And I'm sure the market will then use that as an excuse. So I think Fed Chair Jerome Powell's press conference is my biggest news of the week. And then, of course, it's coming into options. So maximum pain is also a discussion point here. And this is for the 15th, which we know is sitting around 440. So why is that? It's because actually these 4,100 positions here, we've got, this is the net, this is what looks like puts, but it turns out there's a net massive 4,100 in the money call that's sitting here. I put that in the, I think it's a 4,100 in the money call. So we've got this huge 4,100 in the money call sitting there. We have a 440 as being a kind of key gravitational zone. And then we've got a 470 as a key gravitational zone. Now, these are the 2 gamma levels, which we'll be talking a little bit more about on the channel. So 4,400, 4,700, actually, 2 of the big kind of, you would say at this stage, levels that the market may gravitate to, with 45 being the midpoint kind of important level. So yeah, it's not that helpful, but 44, 45, and 47 are actually the zones of the week. My theory is that the markets actually could still rally a little higher, even though they're trying to sell here. US 10-year is my favorite to look at this stage. I'm really eyeing this potentially finding some recovery. You can see here that we actually finally got a spike. Let me get rid of these stupid arrows. And there it is. So you have that wick rejection coming off what's been a pretty strong sell. Now, last time we didn't get very much, but you can see here that we have previous resistance. We've got a demand zone. We've seen a spike. Now, it's not just that. It's also treasuries as well. So I said this in the video on the weekend that treasuries have been in supply, and we know there are large transactions here. That's not up for debate. There's huge transactions here. They're big, and they're possibly sells. And if they are, then that gives credence to, of course, treasuries getting on the short. Now, is anyone here short in the room? I'm not suggesting you go do anything, okay? Of course. Wait a second. There we go. I'm not suggesting anything in particular because that's very important not to. But from a technical standpoint, what does that look like? Does anyone in the chat know? You've got big brains. I know you do. There's some Einsteins out there. Einsteins, big 200. I heard there was some guy born in the 1920s or something, and I heard he had 230 IQ or 220 IQ or something like that. Does anyone know about who this person is? Imagine being that smart. That would be horrible. Horrible. So a few people are saying Ireland. Let's see who said it first. Who's got the biggest Einstein brain? TX Redmond says, I am hedged this week. Lambo. Of course, Lambo has it. Already has a Lambo, knows the pattern. So yes, technically it's an island reversal. You can see the gap up and the gap down. So we do have the island reversal inside of the supply. Now, if you had gone at that last week after non-farm payrolls, it would have been, I guess you would say, an okay trade today because you'd be up 0.5% in the pre-market. But it's an interesting one because it is exactly where you would kind of expect some shorting to happen. This has been a very good trade, totally against, by the way, a lot of the flows. Remember down here, we were discussing this huge volume and we were kind of getting more into the net positive side for treasuries. And I still believe in treasuries, by the way, into 2024. It's a good, generally good recession hedge. Now, there's a difference between recession and pullback. Remember, we saw an inflationary pullback in 22. Treasuries are actually one of the major plays that banks and institutions and big players go to in times of recession. Okay, recession being the key word. Because what's a recession mean? It generally means that we have a cut of interest rates, and that's a big deal. So yeah, treasuries is also on the cards here. Now, the other thing that I mentioned in the newsletter was US oil. So, I just moved my US oil level. Whoops. Can I get rid of, how do I get that back? There we go. So 73.63 is an interesting zone for oil. So I did like this on, of course it's dropping right now, but I do like this level. So 69.50 to 67.50 to me is a huge oil zone. And oil does like a good amount of yields. And this is probably going to be an interesting chart for this week. So if we do see a spike of yields, if we see treasuries weaken off, therefore market risk come back on for whatever reason, whether it's CPI, whether it's FOMC, whether it's OPEX, whether it's just risk in general, who knows? This would actually be against the current narrative, which is an interesting chart. And I just thought I'd mention it. It's nothing's for certain, but you certainly are starting to, you've got these kind of like strange undertones that we haven't seen for weeks and weeks and weeks. Remember, we've been very bullish on the idea that home builders have been bullish, that Dow Jones Transportation's been bullish, that this market on the S&P 500 is just ridiculous and cannot stop. I mean, it's just continuously melting up. You can see here, it just doesn't have any lower lows. It just keeps going up and up and up. But then we get that kind of non-farms that goes against what a lot of people probably tried to do. And I'm sure a few of you out there tried to short non-farms. And I always say the problem with non-farms is the devil's in the detail. Turns out there was government jobs that added a huge amount to the over number. Then on top of that, it turns out that there was a revision down. So really, we kind of lost some jobs from the expectations in terms of the net on the real economy. So because we lost the 35,000 and we pretty much hit exactly what the market thought when you take out the government excess. So really what it did was it went negative first and then it went positive. So remember, often with non-farm payrolls, the first move is there to trap you badly. Okay. Trap you, not me, it's trapping you. So how low does TLT go? Well, it's just speculation, of course, but with treasuries, how low can it go? You're going to have to really time it with yields. I mean, it's going to be the key. So watching it with yields is going to be the big thing there. And if you're looking at it from a technical standpoint, let's just quickly jump over here again. Again, you can see it's kind of been still hovering on these levels. From a technical standpoint, you'd probably want it to come down relatively low. Like you'd probably want to see it kind of come into, that 90 bracket at least, if not into the 87s again. Now, I don't know if it can get that point. It would need a lot of spike up in risk. But there are some positive signs, of course, when you consider if we do have a pullback here. And I know like the current narrative is this week's the biggest worry because this week is OPEX. This week is also the middle of the month, which tends to be weak and bad. And even though the OPEX ruling is 76%, so I think it's like 70 to 76% positive usually in OPEX weeks. We did have a positive Thanksgiving, which is already a good run. We have already had a decent run into this market so far. So again, this is spec. We don't have the triggers on the S&P or anything like this. It's just speculation. Tell me whether you agree. Tell me whether you disagree. I'm interested in your opinions. If you say, "Oh, you're stupid. What the hell are you talking about?" Again, I'm just looking for undercurrents here. So yeah, let me know in the chat. But yeah, usually the stats would say positive week. Okay, that's how it is. But a few people I've been talking to about the data have really pointed out the idea that this week is a little bit unusual. It's a bit earlier for the OPEX. On top of that, we also have, a lot of catalysts. We have everybody being bulled out of their own minds. We do have a possible profitability from the market makers to push at this stage the market a little lower. There is still a chance of 4,700, which is kind of like a key level. So remember, 4,700, 4,500, and 4,400 are currently the strikes, which will update through the week, that OPEX would most likely want to gravitate towards. So yeah, how low for TLT? Depends on yields. I'd probably time it more with yields than anything else. Okay, let's go and have a look at US 500. So this market went to a new high and it didn't like really smash it. You notice I've got a level here. Watch reaction here, 46.37. If that does hit, I'm very interested in how the market reacts to that. So let's say here, CPI comes out. Woohoo! Whoa. Okay. If that kind of thing occurs, especially if we build here, we're probably seeing a trap. Okay. Now, that's not saying the end of the world's coming. I mean, all I'm just saying is that, I'd like to see a pullback and then probably a rally into the new year. But it will be one of those signs. So certainly a level I'm watching is 46.37. I'm also watching here because of yields. And of course, we know already that 45.40 and 45.20 remain kind of the bear targets, which if they can get underneath, could really push that 4,400 narrative over the next week or two. We also know that the Grinch would be kind of good for bulls. So hear me out here. And this is not my data, but obviously I've talked about it on the channel. It's interesting to state that if you had the 3 days leading into Christmas plus the 3 days after, you don't actually want that to be positive this year. It would be better if you're a bull. It would be better it's negative. So that's an interesting one. That's something that we'll be looking at very, very closely. Vladimir says, I've seen your poll where 90% of people are bearish on the DAX. Does that only include your followers? No, that's not my followers at all, sir. I think you'll find that actually most people wouldn't be bearish. I wouldn't short the DAX. What the hell are you talking about? Why would I short the DAX? I'm not even short these markets here. I haven't, like, you could, if you wanted to, you could look at options. But yeah, there's no sign. Remember, it's patience, react, don't predict. Don't get your ass caned by the DAX because that's what it's been doing. It's been slaughtering people the whole way up. No, what that is that's a mixture. That's actually retail positions. So that's not your positions necessarily. But if you took everybody out there, probably not many viewers of this channel, I would like to hope. No one's short the DAX here, are they? If you are, it's okay. I won't make fun of you. Tell me you're doing here. Max Payne didn't work for the past months, didn't it? No. Max Payne is not good enough to trade off. If you're going to use Max Payne, third week OPEX is the only time. But it's just an idea and a level. If you had a technical reason to actually see that level achieve, then sure. But you don't just go and trade. Oh, Max Payne's here. I mean, come on, guys. We all know this. It's not one thing that works. It is multiple things together to build a complement story, which gives you a statistical edge. It's what I talk about in my courses, Day Trading Masterclass, Advanced Masterclass, all those types of things. I talk about building a structural process through having many, many, many different reasons to actually place a trade and then replicating that. I don't care necessarily what the DAX is doing just because it went up 25% or whatever. That doesn't worry me. It's really about replication. You have to say, okay, where's my replicable trade? Now, this is the trade that's just squeezing and squeezing and squeezing. And the huge portion of it, as you mentioned, was that we're getting into the 90% retail short positions. So no wonder they're getting blown out. But I bet you the same thing's been happening on crypto as well. I bet you if you look at the futures CFD style positions, a lot of people have been heavily short. These types of unusual candles show that because these types of unusual candles liquidate people. Okay? That's generally what you're looking for. Huge levels. And that's why on the US 500, I'm not taking out of consideration that the US 500 pushes high this week early. And it actually goes and it smacks a 46.37, 46.40, and then possibly rejects off. That's why I say watch reaction here. We're looking for the evidence. That's what we're doing. We're neither, look at if you ask me what the trend is, it's bullish still, except for the Nasdaq, which showed some turns on the small time frames. That's really about it. Paint the whole picture. That's right. I'm shorting the DAX stocks. You need to be patient. Please, XX. Please. Try it. Like I hope you have the right instruments of choice here. Trading TLT is not easy because the big boys don't trade bonds, correct? But invest in bonds. We experience a rare occasion to see such giant moves in bonds. Correct, Michael. I've said this many, many times. Do not trade generally treasuries. They are better to be investment vehicles. And you are correct. It's very, very rare to have this type of move in bonds. I've been in the market since 2007, 2008, which is quite a while now, I guess. Yeah, wow. It's actually getting on. And I always think about it. I always think I've been in market for like 10 years, but that's not true anymore. It's not even close. So it's a lot longer now. So the thing is that in my total trading career, bonds have only came up 2 or 3 times ever. 2 or 3 times where they've actually had years where they're worthwhile being interested in. Generally speaking, they are bad trading vehicles. Okay. But we are in a massive central bank shift. So because we're in a massive central bank shift, that means that they have become the focus and they're going to be, I believe, a focus in 2024 as well. Same with Tesla and short squeeze. Some mechanic as GME in 2020, 2021 is long-term, except Tesla and AMD happened 3 to 6. What? I'm not sure, Edwin, what you mean. 3 to 6 days instead of months. So good time to add bonds to your pension scheme. I'm not going to make any. That's what you're saying. I'm not going to make any assumptions on what you should do. You need to make your own decisions. Remember, the point of this channel is to educate you into things that we can look at together. We can make better informed decisions of learning how to fish yourself. So how do you fish? How are you going to go and create, better decisions in the markets? So anyway, Nasdaq was the only weak one. We did see a couple of okay shorts last week. Notably, 16,000 did show a little bit of a short. But then, of course, non-farms came out, which you can see here, and it blew higher. Still not above the high, which means some short positions could be still open. There were a couple of profit target levels here. Actually, if I was going to say what was the best trades of last week, I would say stock rotation, which is a big thing that we've been talking about. So some of the other caps been doing well. In particular, copper was doing really, really nicely. Copper stocks did really nicely. Had an amazing Friday, actually, on copper stocks. And you also saw some really good strength in currency trades in terms of just good setups. Currency trades weren't too bad either. Okay, so semiconductors. Let's have a quick look at semiconductors. So you can see here that it has risen back up. Do we have a new high? No, we don't. Will we see a new high? We'll have to see. Trend is still currently, of course, theoretically bullish in some of these, though the small time frame did reject this level last time. So you can see here we had a rejection. So we've got kind of like that res point for this market. Another one is MAGs. So MAGs or MAGs, I think, which is the ETF. Let's use this just an example. So here's the daily. You don't have much data because it's a relatively new fund, but this is kind of like my MAG 7 that I put together. And what you can see here is that it's come back up after showing that weakness. And then we're back into the area. This is pretty much where we saw those large trades. So if those large trades are going to defend towards the short side, we're very close to that as well. A lot of people want this pullback. I get it. I think that it doesn't really, it's just because people can't really see how can it go up so much so quickly. And that's the problem with markets. There are some underbelly signs finally that there are weakness signals. We just really haven't seen those weakness signals. We saw a little bit of rotation to defensives. We had we didn't have any weakness on any of our leads. So all our leads have been really strong. Bond indicator, home builders, etc., all really, really strong. So the only real weakness that's coming through is yields. So it's yields and oil that we're going to be watching the closest this week. And of course, dollar. You want to look at dollar as well, because if dollar breaks through 104.45, that could also be a sign. But I'd say it's going to come with yields. What do you think on gold? Yep. Paul says you mentioned CTAs on the weekend. What are they? Yeah, we'll probably explain that in the newsletter one time. So basically, it's the commodity trade advisors. Just think of it as like they have to they're positioning in. And it's kind of like watching managed funds to a degree. We're watching kind of what's going on in real positioning in the markets. And some of those CTAs can be very, very effective at figuring out whether trends are real or not. How's the central bank liquidity doing? It's just floating around doing nothing, RZ. It's like this. It's like the market's like slowly melting up. It's slowly melting up. Markets can be irrational longer than you can stay solvent. Yes, that is true. It's a saying that I talk about a lot. Thank you very much, Paul. Appreciate it. Chris saying, where the hell is my gold analysis? Where's my gold analysis? Okay, well, let's do the gold analysis here. And yeah, the gold. Look, we were loving the gold till last week. And as I mentioned, I hated what I saw. I hated it. Hated. I'm a bit of a gold bug sometimes on the channel. But when I saw that Monday open, nasty. Unfortunately, that's kind of like what we're looking for in Bitcoin at the moment, that huge sell-off. This is not the type of thing you want to see. And at the same time, what we've seen is a huge shift towards people remember, most of the way up here, people didn't believe. Then all of a sudden we hit here, everyone loves gold. Gold's the greatest thing ever, is the best and everything. So we saw people go from a net 40% positive gold to like 68% positive gold. And that is leading to them getting wiped a little bit here. We do have kind of some stats that show that gold can go into a sideways market for about a month. I'd expect it to be lackluster, in my opinion, with trades and stuff as it builds new structure. So I do think gold will come okay back. But yeah, at this stage, it's very, very difficult to read. I wouldn't say there's much edge on this market. I'm still positive on gold for 2024, but yeah, it's probably done most of its selling for now. Maybe another $40 an ounce or something. That would be where it's at. Koala Bear says Robinhood looks like it's coming out of an accumulation base. Yes, I saw that one posted around quite a lot through all sorts of circles, and that's because it had that huge catalyst run on it. And it's actually a classic. It is a classic kind of base formation. Standard Wyckoff, I would say this is in many ways. Would have been nicer if it kind of double bottomed off with a lower low. But yeah, that's the type of base that you usually look for. And of course, it also has hit my main rules. So if you've been following the channel for a long time, you'd know that I hate IPOs that are tech if you're not early. And then usually it's about 18 months later that you want to come in. So this was July 21. So of course, then we go to July 22. And then we go another 6 months. So really that would be when you start looking at it again. And this is the first positive signs of base. So I would say that Hood does look a lot better. And if it trades well off crypto, you've got to remember, let's say they've done well in the past off crypto and stupid things like that ended up forcing them to go up. I don't know why, but maybe they have. I don't even know what Hood has, to be real. But anyway, could be crypto, could be other things. But this is the type of market that could do well if we do have a nice halving cycle this time around. So Hood definitely on a base from a technical standpoint. Several US bond auctions today can cause some volatility. That's correct, Aaron. It's in the newsletter. So we've got big auctions today and tomorrow on US. I posted on X actually. Let me have a look here. X. Okay. So of course this week it marks the possible 7th. We'll look at this chart as well. A possible 7th week of bullishness. So here's the thing. So you can see here the Treasury is also set to auctions 108 billion worth of 3, 10, and 30-year bonds on Monday and Tuesday, alongside 213 billion short-term bills. And basically that's going to mean if there's an issue there, of course, that's going to go to raise on the yields as well. So that's could cause a little bit of vol. We've got vol through the data points, quite a lot of that. Let's now click on this one. And you can see here that we have a very interesting chart. Now, this one I think is one of those ones that I would save. We've actually used it before a very long time ago. 2022, I think, when people were speculating about the first of what became then 7 potential chances of the Fed pivoting. 7 times was how many times people predicted it would occur. And then the 7th turns out it's probably real. So the S&P 500 performance around the start of Fed cutting cycles. So there are 2 scenarios. 1, we actually have a soft landing. And 2, we go into a recession. Now, really, most of this problem is going to be when we see US 02Y go below US 10-year. That's when you're going to start to question what's happening. Let's hope this isn't what occurs, because basically the Fed cut cycle period is often 4 months of chop, followed by 2 months of chop, followed by volatility either to the bullish or the bearish position. So you can see this is the this is the old catalyst: 6 months of chopping markets and then a movement either way. Now, a lot of it will be led by whether we actually get real growth or whether we actually have a huge slowdown the Fed can't fix, and they just keep having to cut and cut and cut to try to get us out of something where they've pushed it too far. Their track record, not great. So that's something that we will be looking at. But that's a 2024 chart. Love your newsletter, Tom. More excellent content to absorb. Most consistent YouTuber out there. Thanks, Tom. No worries, Steve. Appreciate that. Thank you very much. I used to love shooting stars, says Silver Hot Dog. Yeah, but the problem is by itself, a hammer or a shooting star is just not going to make you that much, is it? Joe says, if gold goes sideways, is that okay for GDX? GDX has a pretty bad stat on it as well, Joe. If you have a look at the I think I put it in the daily show, there's some bad stats around gold just kind of sideways. Again, it's okay. I mean, it might just sit there and do nothing and accumulate. But yeah, it had a really good move. I mean, gold, we were on that thing in October. It was rallying up. Unfortunately, last Monday, as we said, it was not what we wanted to see. We gave the stats straight away. It was horrible. And that's why it's dropped another $70 an ounce or something since then. $60 an ounce. Pretty nasty, but it is what it is. Tom, what's the best way to safely short the Qs? Hold SQQQ? Not generally. Always seems to bite me because I am early. Yeah, so there are a couple of problems with SQQQ. So if you have a look at SQQQ, it's also one of those funds that people don't really look at too much. This is what happens to your money in SQQQ. And it's not just because you're getting slaughtered by the market. It's also because it rebalances and does certain things. It's actually kind of inefficient once you hold it for a few too many days. So you can see there, that was a pretty nasty chart. Yeah. I don't really like SQQQ. I know a lot of you guys like it. I'm more of an options fan to protect yourself from risk, but at the same time, that's a different instrument. And it does come at a cost as well. So time in particular is incredibly expensive. Interestingly, with such a low VIX, although the VIX has spiked here a little bit this morning, with such a low VIX, I think Goldman said that it was the cheapest it's been to hedge in years. So it's an interesting aspect, but hedging is usually, or buying puts is often expensive. Remember, guys, it is much harder, and I know there's a lot of bears out there, it's much harder to make money from markets on the downside, unless you know exactly what you're doing, than the upside. You've probably already found out that. So there's nothing wrong with saying, okay, well, I'm going to hold my positions, or I'm going to do whatever I'm going to do. I'm going to scale back, and then I'm going to wait for my pullback, and then I'm not going to profit from the downside, but I am going to profit from the upside and positioning it. There's nothing wrong with that when you first begin. And then as you get better, you can expand the horizons. All right, what's going on with gas? Why is everyone like natural gas? I don't get it. Let me have a look at this stupid thing. I'm just going to have a look at natural gas because everybody asks me every week, and I feel like it's a troll or something. Okay, so it's getting slaughtered. Yep, it is getting slaughtered. I probably would have thought Nat Gas might have found some buyers in here. So this would have been a level that I would have looked for structure. But then again, patience, react, don't predict. Just because you think it's a good level doesn't mean it's going to be. A good lesson in life, in trading, is that if you think something, you're probably wrong. If you know it, you're certainly wrong. And if you're patient and you react, then you're probably going to do a lot better. What do you guys think? Do you agree with that if you've been trading for a while? S triple Q puts, triple X says no, or double X says not really. So yeah, Natty Gas is going down a lot. It's coming into the second level. So if I was drawing, let me have a look here. This is the weekly. Okay. So if I was drawing a level, I would generally have something like this set between around here. So it's not quite there. I actually think Nat Gas could go a little bit lower first. Rick says people that buy natural gas just because it's winter. Oh, it's such a bad trade, Rick, isn't it? A very, very poor trade is buying nat gas just because it's winter. That is a terrible idea, guys. It's kind of like what I've said about Amazon. Amazon doesn't historically put on a huge amount of money into Christmas. It's not usually the best trade into Christmas. It generally does a lot better before all of that. It's the same thing with if you look at airplane companies and all these things. They do often the opposite of what you're really thinking. So I think that's kind of yeah, nat gas into winter, not generally the pick. Unfortunately, it could keep falling, and that's typical of this nasty thing. Remember, they call it the Widowmaker. It's lost from this point. I wouldn't have thought it was going to be this low, but obviously, I said over here the positivity was good. It did go positive. I kind of lacked interest in it after it kind of got into this area here because I was just like, yeah, whatever. Nat gas is nat gas, but it's lost 35%. Michael says nat gas has much seasonality in it. The demand peak is typically before the heating season, not during it. That is correct. If you know what you're doing, that is absolutely correct. What's the symbol for the 2-year, 10-year inversions? Sure. Let's do it for you, DJ. DJ Sean Mallon. Appreciate it. Thank you very much. Give me a like if you can, if you appreciate this code. So there you go. US 2Y versus US 10Y. So you're looking for that to come under 1. We've got this alert set here, DJ. So yeah. Has it happened? No, nothing's happened yet for us. All right, let's keep going through. So Nasdaq showed a little bit of weakness, but unfortunately, it did end up the week up. So there were still good day trades if you had to go at 16K. In general, this was the weakest market. It still remains the weakest from a chart perspective. US 2K remains the most bullish in my perspective on the charts and remains the one that I think also has the best chance of outperforming, which we've been pretty consistent on. So I still think mid caps are pretty good. If you look at mids, so if we just put mid S&P 400, don't really pick anything. You can see it looks like RSP. So RSP is the equal weighted market, and they're playing catch up. Look where we were back in previous highs. Look where we are now. So they are behind the previous highs. So this has not been a great rally in terms of everything, which we already know. So really the catch up is being played here, not by the NAS. The US 500, as we talked about, key levels again for people coming in, 46.37, watch reaction here zone. Going to be focused on that. 45.40, 45.20, 4,400 is theoretically max pain. I don't know if you can even expect that, but anyway, that's the level for it. And 4,500, 4,700, and 4,400 are the OPEX week options levels that are most likely going to see something touch there. Terry McAllister, $5 super sticker. Thank you very much for the support. Much appreciated. What do you think about the Russell, Tom, from a points perspective? Excuse me. Yeah, I'm still targeting somewhere around that 1920 on the bull side from a TA perspective. But Look, I also will set an alert above here, interesting level to see how it reacts. So that's about 1892. So Russell still looking bullish. Even this shooting star, if it gets past that, I'd say that we could get a little bit of a squeeze here. Any idea what happened with solars on Friday? Could be yields. I didn't actually look at the news about them. I tend not to really fall into the news trap either way, but I'm sure there was some valid reason. Let's have a look through the news here. Invest. Oh, is that really? No, that was ages ago. Okay, so there's nothing really here coming in from Tan. No, I'd just say it was just some weakness in the overall. So clean energy, also an interesting one. I think clean energy probably might have the better base moving forward over the next week, but we'll see what happens there. So some interesting ones for us in terms of what we're looking. Appreciate it, Stacey. Thank you very much. Good morning, everyone. Thank you to Oleg as well. Uranium. Yeah, uranium is an interesting sector. Yeah, uranium is an interesting sector. If you have a uranium stock you want to look at, just let me know. They're kind of gone though a lot already. Yeah. Chris says some guy named Tom said nat gas is a tough months ago. Be very careful, he said. Yeah, that is true. The Widowmaker, generational Widowmaker opportunity. I like it, big silver hot dog. It's true. The nat gas is such a bad trade. It always gets people. I get upset because new people that want to get ahead in life and want to do better in their trading and investing journey, they get sucked in by, I don't know where they get it from. It must be some Dodge website. I don't know where they're getting this nat gas idea from, but it is such a dangerous trade. I cannot tell you how dangerous it is. It's futures roll contract danger. It's nasty. It's the Widowmaker. It moves crazy percentages. And when you get hit by your first ever roll, someone in the chat tell everybody here, when you get hit by your first ever roll, the pain is real. I mean, the pain is real. I'll just quickly tell you a story because I want to say it anyway. All right, here's coffee, 178. Okay. So you think, all right, well, coffee 178, cool. That's pretty cool. Now, this contract doesn't seem to go back very far. But anyway, here we go. So 2000 and somewhere around here or here, I can't remember. But let's say 2019. All right. This is just a case of how bad roll really hit me. I thought coffee at $90. Come on. Coffee at $90. I drink that. It's going up. China demand's going up. Everything's all good. It's going up. It's going up. I know it's going to go up. I'm a genius. Okay. So I thought, okay, well, let's just put a little buy in here. Little buy. All right. There it is. And you think, okay, cool. Well, you come back and $140, not that, a little while longer, but $140. So at the point, by the time my $90 contract had got to $140, did I make any money over this period of time? What do you think? A, lots. B, a little. Oh, need to actually learn how to spell. So we'll go little. Then we got C, none. All right. What do you think? Is it A, B, or C? A, B, or C, guys? A little, lots, or none? Remember, it went from $90 to $140. I was long. A of options. No. Just buy the futures. Buy the contract. Okay. The answer is B, a little. And I mean a very little amount. We'll just call it none, basically. So it was 50% increase. But roll contract had killed me so badly over that period of time that I made a little bit of money. Yet I was correct by 50%. It's totally rigged against you. You got to be very careful. The roll is nasty. Too long of a time and none. Yeah, it was pretty much that. B, because I believe in you. It was so little. It was horrible. It was a terrible trade. Terrible. Anyway, so we still have bullishness in the markets. Don't get me wrong. Yields are the watch this week. That's what we're going to do. Let's do a couple of single stocks here. Tesla first up. Okay, Tesla. What can we say? It remains in the same thing that we've seen recently, which has basically been, Elon Musk doing his thing. I mean, I would say this is Tesla right now. Okay. But we replace this with Tesla. Here we go. We'll just put a T here. All right. That's what I think the channel is doing right now. So it's telling you to do this. So it's still coiling. Clearly, there is no breakout at this point on Tesla, but it's going to be, you would think, relatively explosive. So you've got the downward trend, which is one pretty clear trend that I think probably a lot of people are spotting. I'm going to want it above this price to really consider a breakout happening. 253. Then on the bottom end, 230-ish, 232 also on the daily will be big to the downside if we want to be slightly early. So yeah, coiling, I think worth a watch now. Now, I've been pretty disinterested in Tesla. I know you guys want to always cover it, but I've been disinterested in it. I'm starting to get interested in the chart again. So this week, I'm watching Tesla. I've got my alerts and we're ready to go because that's going to be a big thing here. Is RSI reliable? Says Andrej. Not really. Most people use it as divergence. Look, it's a good indicator. Obviously, it's good, but it needs to be used in the right circumstances. So the problem with RSI is it's not good enough by itself. It must be used with other indicators. You'll notice I don't generally jam a lot of indicators on the charts. That's like, there are some I use and some I put in certain circumstances, but in general, most of them, once you've done charts for long enough, and a few of you will be spotting this, let me know in the chat, you'll actually know exactly what the indicator is going to show you. So you'll know what, in general, like let's say stochastic's going to look like. You're going to know what a MACD is going to look like because MACD is derived from, you're going to know what a Bollinger is going to look like. You can just tell all of these charts. Do anybody now know what an indicator is going to be telling them based on the chart price action themselves? All right, let's have a look at AMD. So this was a really positive piece of data. AMD, really good buy if you did end up getting this down at the 95s. Look, I've talked a lot about AMD being a scary stock to me. And the main reason is because they usually underperformed or did something kind of not that wasn't so good. But in this circumstance, we do have AMD into the highs. So this is actually a pretty significant high. It actually broke out, in my opinion, last week. I think it's got enough catalyst storylines with it, including their new, I think it's their new architecture stuff is pretty good. Correct me if I'm wrong. Anyone know? I think they're a real competitor now with Nvidia in some ways, supposedly. I mean, I could be wrong again. I do like the weekly close. I like the catalyst. At this point, the trend does seem to be intact. Obviously, if the market does get beaten up, AMD is going to get beaten up, but it's got room to go. And it's a stock that's been behind. So I'm not too sure. I'd probably read up a little bit about the new AI chip stuff. Yeah. So they sell an AI chip like Nvidia. Edwin says, yeah. So this is AMD's next Nvidia by March. Yeah, I do think that the catalyst is pretty strong here. The narrative's good. The trend action is strong because, of course, it was weakening off. That's a doji, an indecision, double indecision candles, followed by bullishness. So I think that's a pretty big key here. I'm long SoFi. Okay, let's have a look at SoFi here just to see how that looks on the charts. Now, SoFi was something we've been relatively bullish on from these levels. I still remain, I think, from a technical zone on the bullish side of SoFi. It had a pretty decent week last week in terms of the 2 weeks before as well. Anything in this level was very interesting. So I'd like to see breakout. We didn't quite get above that level. So you can see we've got an alert here. That would be good as well. Meta and Microsoft's claims they will buy AMD's new chips. There we go. That's cool. I look, I didn't read the narrative. There's a lot of things I'm covering at the moment. I'm really interested in the charts, the macro side, and getting the data together because I think the data is very, very, very keen for 2024. I'm trying to break down some stuff that I think is kind of in depth here. I'm also really looking at 0-day TEs and getting on board some of the changes there. So that will hit the Market Masters Club if you're interested. I'm going to be releasing some stuff on that and how to start using options a little bit more. Because let's face it, 0-day TEs have changed hedging and they've really changed the VIX and they've changed a lot about how you can day trade with TA. Now, I always believe TA is number one. Okay, don't get me wrong. I think TA is one of the big advantages that you have in markets moving forward. I'll be real. I'm going to ask the chat here. I think fundamentals, except for X factor. Now, X factors are very important if you can recognize something that a robot can't. I think fundamentals are full on AI'd. I mean, full on. I think they're kind of dead from the perspective of being able to read balance sheets and get too much edge. What do you think, though, in the chat? What do you guys think? Do you think fundamentals are partially dead? Do you think they're still worth knowing? What do you think? TA, I like the data. I'm a big data fan. This is the period of the Russell and MSCI. Forget NDX for now, says XX. Yeah, but it is becoming a popular opinion, which is kind of annoying. But anyway, we're early, so that's okay. What's this saying here? Zomba says, told you about 2 weeks. I think about Paramount. Look at it now. Also possible buyout incoming. The Paramount? Oh, told you about 2 weeks ago. I remember this, Zomba. You did. You said, think about Paramount. Look at it now, lol. Well, good work, dude. I'm not saying it's no good. Also, possible buyout is incoming. Would guess $40 per share. Well, there you go. Very good. Let's have a look at Paramount just because I will see. There are many, many stocks. Now, where is it? Paramount Global. Is that right? Oh, look at it go. What did we say last time? I assume I would have just gone, that's a nice breakout. Looks good from that perspective. And then I would have said something about that probably. That's probably what I said. I would go with the same thing. I mean, the TA side, you told me 2 weeks ago. Yeah, I mean, I probably would have reduced off here, but yeah, nice work. There you go. I don't know. Is that what I said? Probably. TA for swings and buy-in. Yep, TA can be used in other things. News is number one. Andrew. Is Andrew right, guys? News is number one. What do you think? Not to be mean to Andrew. I'm just wondering whether news is number one. News is a reason. A catalyst, should we call it? But it is generally not a good one to invest or trade on. Okay, it's always a bunch of crap. You'll see that there's like the news will smoke you, bro. I'm sorry, it will smoke you. It really will. I know you're probably sitting there going, "I'm going to dislike your stream so hard right now, bro." I'm just please listen, hear me out. There is always a reason for why markets move, but think of markets as a fluid beast where there is positioning going on all over the place. Okay. There are narratives that are written and we are given limited data. Okay. There are narratives that are written. Then those narratives become news, which we all talk about and we go, that's the reason it moved. That's the reason. We know the reason. And then often it will be completely opposite to that. And I'll just give you case in point. Okay. Just so we know. Okay. So odd US dollar. All right. I'm just going to use this one again because it happened a few weeks ago. All right. The narrative was interest rate hike. Okay. Boom, 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 boom. Buy the rumor. Dump the news. Okay. This actually what happened. So it dumped massively. Now, if you had commitment in your trade, you knew what you're doing. You know, I mentioned this is probably a bullish position from a technical standpoint, but it was a buy the rumor, sell the fact of the news. Now, you could say the news was the catalyst, sure, but it didn't help us with positioning. So anyway, that's just my opinion. I think that it's that the news is evil and it will get you into all sorts of strife. But trust the chat. What does the chat say? Dow Jones Dave just woke up. You've been slow, Dow Jones Dave. Must be all those profits from owning the Dow recently. Is that right? Koala Bear says, do you think we'll see rotation within precious metals? Gold is down, yet platinum and palladium are up. Yes, that is possible. Yes, gold is clearly manipulated in some way. Something happened to it. News is a market maker's instrument? Probably, yeah. Zomba said, yes, you said about the breakout. Just wanted to remind you of the trade because you don't really do what? Forgotten about companies love your stuff. Oh, you mean I'm not going on about Oh, no, I love forgotten about companies sometimes. But yeah, they're not, look, they're bad for the clicks, man. You know, if you said Paramount 2 weeks ago, what? Come on, Zomba. Everyone be like, shut up, dude. We don't Paramount. What? What is this crap? That's like me bringing back space and then claiming it's a good trade and it's all fantastic. But some of these crappy stocks have been coming back. You got the Zoom, you got the hoods. I mean, just saw the hood before. You got the SoFis. Silver, the biggest manipulation in history. Probably not really wrong, Nuno. That is true. Russell is being pumped to draw retail before recession. Could be market. Certainly a possibility. But obviously, price action currently dictates bullishness. Fundamentals are dead because 70% market maker traded by robots from Renaissance and Citadel and robot-based TA and VWAP statistically. Oh, yeah, VWAP's pretty good. SoFi can never get above 10. That's possible. I don't know. But I still think that it has that bullish kind of pressure on it that's there. We want Tesla, Amazon, BTC, dude. That's what Paul says. Well, we did BTC before. So again, with crypto, nasty sell, could be near the end now. This is the type of thing you see near the end of runs. You sometimes do push a new high, so I'm not dictating that it can't go 46, 48, but yeah, certainly a turning point here for that. Look, I may have to go, guys, just because I've got a few commitments that I have to do, but I do want to mention this. Number 1, sub. Number 2, sub to the newsletter. Number 3, watch yields this week, okay? And get your news calendar out. Make sure you have your news calendar. You must be aware of all this news. You got the CPI. I don't know if that's going to be a big thing. I think it might not be, but never know. It's PPI, but more importantly, Fed Chair Powell being annoying. So Fed Chair Powell being annoying, 2:30 p.m. Wednesday, be there. That's going to be one of your big catalysts, I would say. Key levels, again, the big zone, 46.37. I'm interested to see a reaction there if the markets can push higher. Current market conditions are bullish. Okay, there's no doubt. That's what it's showing. I can't stop it. I'm sorry. I know you want it to sell off. Nasdaq still the weakest of the markets. US 2000 still the strongest of these markets. DAX is off in its own weird world. And we do basically have a dull market at this point. So until we see catalysts, it's going to be very difficult. But I am going to be watching dollar index. I'm going to be watching oil. I'm going to be watching yields this week, okay? Also, Tesla could be worth a watch because it's in the coil. So maybe it'll break out. Stocks such as Apple, Amazon, all of those types of ones. Look, they're driving higher. They're close to highs, like all-time highs for things like Apple. That's interesting. We're on kind of like a coil here on Amazon. Let's just go through these. Google looks like it's doing actually almost an island dance towards the upside. So we'll find out. Treasuries obviously have done an island to the downside. Microsoft, my favorite stock, is just, I don't know, it's doing its thing. I'm always bullish that. So what can I say? And Nvidia is coming off the first buy zone of 450. AMD also an interesting catalyst one that I'm sure a lot of people will continue to talk about with all of the big news around it. So that could be one of those flow kind of trades that some people look at. But yeah, I think yields is my main focus this week. And that's what we'll be looking at on the daily show. We'll be tracking it all along. So make sure to check it out for Monday close. And I'm sorry to cut it short here today, but real life commitments do hit me. So that does happen. Do we believe oil will go higher? I'm looking for oil catalysts to go more bullish just because it obviously hit one of my key levels. Problem is going to be that this is very possible. So you've got here, it is oversold. You can see that 20, the 20 is sitting on the most traded zone. So 73.63 is also a key level for seeing reshorts of oil. But look, we'll be watching. We'll be paying a lot of attention. Good luck out there, guys. Hopefully you've been relatively bullish recently. Even if you sold in the Mag 7, it's still not at new highs, is it? So the thing about this is it's been a rotation and we've kept that consistency going for 3 to 4 weeks. And at this stage, we have to still keep that consistency. I know it seems like, Tom, you're bearish. Remember, well, around this level, I don't really feel super bullish. I feel kind of neutral, to be real. I'm looking for both bullish and bearish catalysts. Last Friday was like a technical bullish break, but very weak and strange. I don't like strange things. So we'll keep watching. Close today. Check it out. See you, everyone. Bye for now.